Let's get to the big man from the infrastructure space. Yesterday, I caught up with A.M. Naik, the group chairman of L&T. He has been conferred with the Padma Vibhushan at the Republic Day. This is the second highest civilian honour and very rarely given to industrialists. I think Narayan Murthy was before him, and Azim Premji and Dhirubhai Ambani. It's not often, it's once in 5-10 years that you get to hear of such a big honour. Started off in a village in Gujarat and has risen to this level. In his first job, he was actually asked to improve his English. So, you know, that's the distance he has traversed. Of course, I spoke to him about his trajectory as well as the outlook for L&T itself, the infrastructure space. How is FY20 or 2019 calendar looking like? And much more important, acquisition in the IT space. Listen in.
Next year, I see it moderate because there are elections, a lot of funds are required to take care of the rural people, the farmers and others, where in order that the votes are secured, they need to be also helped. And why not? But for the impact of that will be on development.
Okay.
And to that extent, I think infrastructure will be affected. So 1.5 years, I don't see great deal of growth coming after the election. Our order booking is good right now. So we don't see from revenue perspective a very negative impact. I think we'll do well next 1 year. But order intake, which will be then impact the following year, is really where we need to be concerned about. Please show me how many industrial houses have such a strong balance sheet. So you pick the strongest company and say we won't allow you buyback. And there are many not so strong companies go through with whatever they want to do. So we have taken up with, of course, SEBI, we have taken up in Finance Ministry. I'm very hopeful that some amendment will come. Any good proposition in the market we would be interested in. But Mindtree is not the only one. There are a number of other companies available. Over 2-3 months, we are looking at something or the other to clinch.
Okay, well, you will be hearing more of that interview. You heard that, no,
2 to 3 months, they're going to clinch some IT company.
Oh, okay, fine. So we're going to wait for that to happen. Perhaps we'll touch base with them once again over the next couple of months. But let's do one thing. Let's move on because we have another guest waiting by. Intellect Design Arena saw a decline in revenues on a quarter-on-quarter basis, along with a sharp drop in margins and profitability. Arun Jain, the chairman and managing director of Intellect Design Arena, joins us now to talk about that. Mr. Jain, good morning and thanks so much for joining us. Can you tell us what was the key reason for that sharp drop that you saw in license revenues this time around, and what's the outlook going ahead?
Thank you very much for listening to the story. I think this is a new business line which CNBC investor needs to be aligned. It's not a quarter-on-quarter business, first of all. It's a year-on-year business. So I think please don't trade the Intellect from quarter-to-quarter perspective. So that's my humble request from you. We have grown 42% year-on-year in Q3 and 28% in dollar terms. I think these are most bullish growth in IT company has delivered to the marketplace. Our license revenue in last 9 months have grown 79% in last 9 months cumulative for this financial year, which is again from 140 crore to 250 crore of a license number. The number of digital wins, 12 wins which we have done. Our collections have gone 376 crore. EBITDA margin is 11% at close to 42 crore, 41.5 plus crore. So all the metrics which is there, operational metrics, the margin which is the 13.31 crore which you are looking at the finance PAT number, out of which 14.5 crore is because of reinstatement of 69 rupees 70 paisa drop on the 31st December, while average price during the quarter was 72 rupees. So that is only for reinstatement of receivable, which is recovered as soon as the dollar becomes 71 rupees. That is coming back to the same number. So these are the metrics which need to be measured. Is our EBITDA margin. I think we are growing. We are growing in collection. So all the operational metrics are in the right direction. So that's what we believe in the Intellect. And that's why I want to educate all the investors that product company, we don't have many companies to have a comparisons, and that may create a problem for us going forward.
Okay, Mr. Jain, can you give us a little more color on deals? If you look at the numbers for the last 2 quarters, Q1 was 527 million, Q2 515 million, Q3 505 million. It's marginally lower, but give us a longer term view.
Yeah, I think that's a better way to answer, Lata. We had identified that we need to focus on destiny deals sometime in September 17, 5 quarters back. And the destiny deals are those deals which are more than 20 crore each deal value. And these deals are around 22 that time. Now those deals have moved to 36. These numbers of 515 or 505 are not as clearly identified because some deals are $50 million plus, so single deal movement here and there shifts the number metrics substantially. And we have 2 deals which are more than $30 million for to be closed in next 6 months. So those are the deals which makes and breaks the entire revenue growth.
So on the back of all of this, is it safe to assume that you will beat your FY19 guidance of a 20% revenue growth?
That's right. That's right. So we are upgraded to 25% revenue growth. That's intact.
Okay. Can you give us a little more color on cloud revenues? Just the sources of the various orders.
Yeah. So cloud and subscription revenue, I want to look at it to update investors. I think cloud and subscription revenue has potential to generate 10 years plus revenue stream. So these are subscription. When somebody signs up, some bank signs up, it grows. So but there's a lag in revenue booking. As per AS15, we can book, if I'm signing a license deal of $3 million, I can book $3 million in the same quarter on the date of signing the contract. While $3 million, if I distribute over the 5-year period for the client, I can book only $75,000 per month, and only for monthly basis I can book that revenue. And that revenue also start booking only when the system goes live. So there is a lag between signing of the contract and system going live, which could be 6 months to 9 months. So that is a shortfall of that. But if I look at increase the revenue stream to 10 years from 5 years, because when it's a subscription revenue, normally banks use the system for 15 years. So even if I take 10 years it's like a telecom revenues. Telecom revenues, initially you make an investment, but start coming up after 1 year, 2 years, and your volume also growing up. So that's where the cloud and subscription revenue is there. So we have 4 services and 4 different models, and we have 18 clients. They are 20 crore revenues. I think that's a good story right now.
So this 25% revenue growth that you've outlined for FY19, is it something that you can do in FY20 as well?
We need to work it out right now. We love to do it, but we'll come back to you as soon as our business plans of FY20 will be clear.
All right. Take your point, Mr. Jain. Thank you very much for explaining in detail the way in which this product business works. As you point out, there are not too many comparisons in India. And all the very best, especially with the cloud revenues, which you say are going to be, giving you more sustainable revenues and margins. Thanks a lot for joining us. Okay, while we were speaking to Arun Jain, you must have noticed some exclusive news, CNBC TV18 exclusive that flashed on your screen. CNBC TV18 has accessed the Form 483, which has been issued to Aurobindo Pharma's Unit 4. This is a form which is issued by the US drug authorities when they judge a plant for suitability for producing drugs meant for use in the US. Ekta has the details of what she has read in that form. Ekta.
Hi, thanks Lata for that. Well, this is actually important, and the street has been waiting for this particular Form 483 to come out for Aurobindo's Unit 4, because Aurobindo's Unit 4 is in fact a very important unit for Aurobindo, because they manufacture a lot of their injectables from that particular unit, and Aurobindo has given quite a strong guidance in terms of the injectable growth for FY19 itself. However, it was inspected in December, from the 3rd of December to the 14th of December. The USFDA had issued 2 observations to the particular facility. Now, when you say 2 observations, it does not sound that, that difficult to resolve, but it also depends on the quality of the observation. So the 2 observations include, first, procedures designed to prevent microbiological contamination of drug products, which are expected to be sterile. Sterile means injectable, is not established or followed. And the second one is protective apparel, which is not worn as necessary. Now, the key disconcerting part is that this particular Form 483 runs for 12 pages just for 2 observations. The first observation, in fact, has 7 parts, which runs into 11 pages. So that is probably the key thing to watch out for, because while the 2 observations might look benign, it is the intensity of the observations which need to be looked at for them to resolve.
Okay. We will get back to you, Ekta, as you speak to the company and to experts on how serious is this warning on microbial contamination. I guess apparel may not be that serious. I mean, I assume it can be remedied very quickly, but we'll allow you to give us more color on this particular warning that's come from the 483. This is Aurobindo. Anyway, the stock at the moment is in the green.